Uh, David, I would like to present to you Tesla's current position with respect to achieving its yearly target. Earlier this year, the company released advice to deliver 1.8 million vehicles, but they surpassed that goal in the second quarter, delivering 466 other vehicles as opposed to the estimated 445,000. They're now basically halfway towards 1.8 million. And almost everybody agrees, unless something dramatically changes, they will hit that target because they're expected to increase production and increase deliveries in the second half of this year. A few days ago, Tesla released its financial results and shareholders letter for the second quarter of 2023 after market close. However, instead of affecting the stock positively, the company's stock dipped despite satisfactory numbers reported by the company for the quarter. In fact, when Tesla reported earnings after the bell, it showed a record for quarterly revenues, but lower margins thanks to price cuts and incentives, although the stock price remained flat. After the initial report, it began dropping during the earnings call. CEO Elon Musk and other executives failed to deliver precise specs and start of delivery dates for the Cybertruck. And for a robo-taxi-ready vehicle, it also didn't help matters any when Musk and other executives said during the call that vehicle production would slow down. During Q3, due to shutdowns for factory improvements, it's now down about 5% after hours prior to the release of the Q2 2023 earnings report. Tesla reported revenue of $24.93 billion versus the $24.47 billion expected, according to Refinitiv. Wall Street estimates predict Tesla will bring in about $24.9 billion in revenue for the quarter, which is nearly 50 higher than year-ago sales of $16.9 billion. In terms of earnings, however, Tesla is close to Wall Street estimates. In the first quarter of 2023, Tesla reported adjusted earnings of 91 cents per share, which was higher than the 82 cents per share that Refinitiv had predicted. Net income gap was $2.7 billion, up 20 from operating income the previous year, but down 3 from the same quarter the previous year at $2.4 billion. In the second quarter of last year, Tesla had sales of $23.33 billion and a net income of $2.51 billion. On a recent earnings call, Tesla revealed net income of $2.27 billion on revenue of $16.93 billion. Musk stated that while 1.8 million car deliveries are still our goal for this year, Q3 output is expected to be slightly lower due to summer shutdowns for numerous factory upgrades that start early this month. The closest estimate of sales provided by Tesla is 479,700 electric vehicle deliveries, which exceeded Wall Street's expectations and were partially fueled by incentives and discounts. The company reported 466,140 total vehicle deliveries for the second quarter. Thus, the overall gross margin was 18.2%, which was also a low for the same time. Operating margins were 9.6%, the lowest for at least the previous 5 quarters, in a shareholder deck. Tesla disclosed that, among other things, the lower margins it experienced in the second quarter were caused by lower average sales prices as a result of the pricing and mix of the vehicles it was selling, as well as the expense of increasing production of internal design battery cells, or 4,680 sales. Income from Tesla's primary automotive enterprise increased 6.5 in a row to reach $21.27 billion, representing a 46 year-over-year rise in energy generation. And storage revenue from solar power plants and backup batteries increased 74 annually to $1.51 billion, with more cars on the road thanks to Tesla's services and other. In spite of this, Tesla's stock price has been correcting and is emerging from overbought territory following the release of its Q2 earnings. Analysts believe the Tesla stock price needs to accumulate buyers in order to sustain at the current level and revert back. Additionally, Tesla shares may sustain above the 250 support zone to revert towards the $280 revenue, including fees for out-of-warranty vehicle repairs, increased 47 to $2.15 billion. So far, Tesla's stock price has increased by 3.69% in a month and by 57.78% in the previous 3 months. In addition, Tesla shares have increased by about 91.37% in the previous 6 months. Tesla stock price has surged to approximately 119.48 this year, indicating that this is the maximum recovery potential for the shares for 2023. Technical indicators, however, point to the price of Tesla stock declining. The relative strength indicator illustrates the Tesla shares downward trend momentum. Given all the hype surrounding the story heading into this quarter, it may be safe to say that Wall Street did not receive the company's Q2 earnings call well. The analyst community felt that the report and subsequent earnings all provided no major surprises and were better than feared overall. This was a Goldilocks Q2 print by Musk & Company, according to a note to clients from Wedbush analyst Dan Ives. Ives increased his prick target for the stock to $350. We anticipate a slight decline in share price as the current valuation probably required a better Q2 result, so there aren't any big surprises either. Ahead-looking pricing, production operating leverage, and demand commentary will likely weigh on shares following the significant run-up in the stock. According to Citi analyst 8 Mitchell's analysis of Guggenheim's Ron Jasico, who has a sell rating on Tesla, when asked whether investors can expect to see Tesla automotive gross margins stabilizing or rising after price cuts and factory improvements in the near future, Musk demurred the short term. Varying chances in gross margin and profitability really are minor relative to the long-term picture. Autonomy will make all of these figures appear ridiculous. With the firm riding high on a shareholder deck highlighting its aim on leading the way in AI development and having commenced production of its dojo. Training computers, Tesla's research and development expenses increased to $943 million from $700 million in the first quarter. Notably, in the first quarter of 2023, Tesla's crossover, the Model Y, surpassed all other automobiles in sales globally. The eagerly anticipated cyber vehicle was also highlighted. Fans who are excitedly anticipating the start of deliveries for the angular sci-fi inspired pickup that Elon Musk first teased in 2019 may be disappointed to learn that Tesla is only currently building release candidate prototypes, despite the firm saying in an investor deck that cyber vehicle factory tooling is on track. Recent images of factory workers gathered around a Cybertruck at Tesla's Austin, Texas facility were shared on Twitter by the company. According to the tweet, the first Cybertruck was constructed at Giga, Texas. Musk stated during the earnings call that the truck would have 10,000 distinct parts and a lot of new technologies, considering the common statement that it is never easy to predict when a ramp would occur. Musk also stated that Tesla will be spending more than $1 billion on Dojo over the course of the following year. Initially, Tesla will produce the Cybertruck in large quantities next year, and we will deliver the vehicle this year. Tesla is creating a supercomputer called Dojo for use in computer vision and machine learning training. You see a lot of AI companies doing, LMS and whatnot. And I'm thinking, if they're so great, why can't they make a self-driving car? Because it's harder. As an example, Tesla collects data and video clips from its customers and company vehicles to improve existing software and to develop new features that become part of its driver assistance systems. Since at least 2 months into 2016, Elon Musk has maintained that Tesla will produce a self-driving vehicle. He also stated that cross-country travel would be possible in 2017 without the need for driver assistance. That hasn't happened yet. The company's driver assistance systems, which are promoted in the US as autopilot or fully self-driving capability, still require a human driver who is always prepared to steer or brake. During the KGF portion of the call, Elon Musk, as stated, I know I am the boy who cried FSD, but I think we will be better than humans by the end of this year. Tesla is focused on developing self-driving technology for the US market, but that's for the future. For now, let's focus on the present. Tesla beat street projections for second quarter revenue of $24.51 billion, reporting revenue of $24.09 billion, all adjusted EPS of 91 cents beat estimates of 81 cents. In terms of profitability, the revenue number shows a small increase from the first quarter and a spike of more than 45 from the previous year. While these figures made shareholders happy, Tesla's adjusted net income was only temporary overall, coming in at $3.1 billion compared to projections of $2.87 billion and more than the $2.9 billion adjusted net income from Q1. After reaching an overbought point and declining immediately after the release of its Q2 earnings, the price of Tesla stock has been experiencing a pullback and is moving back from an overbought area. Additionally, the stock has increased by nearly 91.37% over the previous 6 months. Given technical indicators, the share price of Tesla is expected to decline. Subscribe for more foreign stocks.